Hello everybody, welcome to today's special webinar with myself, Gavin Holmes, the author of Trading in the Shadow of the Smart Money, and Danny Younis, who's joining us from Australia, who's obviously, many of you will be aware, has just recently published his book, which is also about trading and investing using the Wyckoff volume spread analysis trading method. Now, we've decided to hold this webinar today because of what has been happening in the markets the last week and a half to 2 weeks. 2 weeks ago, I did a webinar about a trade guide, a signal called a test in a rising market. So today I'm going to talk about two key principles in the Wyckoff VSA method that if you can see them and you can read them, then you can make money. Because, and I'll make this very clear, when these principles appear and they're in the right place, they are very, very strong principles. Now we're going to look at one to the long side and one to the downside, because again, there's always opportunities in these markets to buy them and sell them. Now today, we're going to look at Forex, we're going to look at futures, and we're going to look at some stock charts as well. So we'll have something for everybody, depending on what you trade. Now, as you know, because you're here, we sent out a newsletter, a monthly newsletter that we're going to start doing now every month. And if you've got anything that you'd like to see in the newsletter, please do email us or let us know. I want to make you aware of, as well, that we've got a new chat area on our website because we've just launched, in case you aren't aware, a brand new website at tradeguider.com. I'll take you through that later. And if you've got questions about the packages that have just been launched, or you've got any questions at all, that is a great place to connect with us because it's manned by a team of VSA experts from around the world in different countries who can answer your questions for you. So let's start off with something that's very important, a disclaimer, because we're a registered company. That's my dog, who's also a trader. She's probably long at the moment in the pound, I believe. So sorry about that, but she's a very good guard dog. She's a little Cocker Spaniel. We live in the New Forest National Park in the south of England, which is where I'm broadcasting from. So let me read this disclaimer to you. It says trading stocks, options on stocks, futures, options on futures and retail off-exchange foreign currency transactions, Forex, involves substantial risk of loss. It's not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures or Forex. Therefore, you should not invest or risk money that you cannot afford to lose. TradeGuider Limited is an authorised representative of Forex Max Limited and were regulated by the Financial Conduct Authority in the UK, number 229906. Okay. Right, let's just check. One more sound check before we move to the next slide. Can everyone hear me okay? Lee just said that the sound was a bit broken. It should be good now. We should have good sound. We do have a storm here in the United Kingdom, which may affect the quality of the sound, so I'm sorry about that. But at the moment, it's all looking good, and it is starting to calm down out there, which is great. So let me introduce myself today. For those of you who don't know me, or you've just come into our database, we've got many new traders coming into the TradeGuider database over the last 6 weeks. And it's not surprising because many people are realizing that the opportunities in the markets are absolutely massive right now. And many people want to take advantage of that. So I've written 2 books on the market. The Undeclared, Trading in the Shadow of the Smart Money, and the Complete Volume Spread Analysis System Explained. And everything that I wrote in those books was based on the original teachings of Tom Williams, who wrote The Undeclared Secrets That Drive the Stock Market and Master the Markets. And with us today, we're joined by Danny Younis, who's also written an excellent book, which I highly recommend, which I'll talk about shortly, about how to trade these markets. And we're going to talk today about a strategy that's been adopted by our hedge fund, the Wyckoff Williams Investment Portfolio Fund, which I must make clear is not a public fund at the moment. So please, a lot of people emailing me saying, how do we get involved with that? When we're ready to launch it and the prospectus will be out with our results of trading, we will make sure that all our customers get that first. So if you're a customer of TradeGuider, you will get the details when they're ready. So let's move forward then and talk a little bit about trading, investing and trade setups. Now, I didn't start my career as a fund manager. In fact, as you'll see from that awful picture there, when I was 19. I was a police officer. That was my background. But for those of you that aren't aware of how I got into this, I was very lucky to have met this man on the top left of your screen here, Tom Williams, who passed away, unfortunately, in November of last year. But he was my mentor, my teacher. He traded the markets for over 30 years. He was a former syndicate trader, and he imparted his knowledge to myself and many others, including Danny, who's with us in the room here, and showed us the truth about how the markets really work. And I've had a lot of people telling me when I've been doing conferences, I do seminars all over the world. I am doing a number of seminars this year. We're just putting together a roadshow again here in the United Kingdom, hopefully one in Europe, Australia, and the US towards the middle of the year. So I will be back out on the road doing what we love to do, which is to do live trading. The last time I was actually doing a live event was here at the Chicago Mercantile Exchange headquarters in downtown Chicago, but that was in October of last year. It was actually Tom's very last webinar that he was able to do. He couldn't attend live because he wasn't well enough, but he did come in over the internet, and we actually traded some trade setups live in this event with our live cash accounts. And I'm going to show you some of those setups today because they're here, they're happening right now. And it's interesting that more and more people suddenly come to the financial markets as the news reports are how bullish they are. Now, if you look back 6 months ago, maybe even 9 months ago, in fact, there was so much uncertainty, wasn't there? We had Brexit in Europe. Everyone said the stock market was going to collapse and that was going to be terrible for the British economy. And of course, the opposite happened, as usually does. You know, if you see on the media, they tell you one thing, you can bet your bottom dollar that the opposite will happen. Same with Donald Trump getting in. Everyone said, well, if Trump gets in, the market's going to collapse, stocks are going to collapse. But of course, that didn't happen either. We've had a massive, massive bull run. They've even called it the Trump rally. Well, there's a reason for these bull runs. They didn't start with Brexit and Donald Trump at all. They've been going on. This bull run has been going on for nearly 4 or 5 years now. 2011 was when it started. And as Tom wrote in his book, trends go on a lot longer than you actually believe they will. I'll give an example of that. If you look at the trend of pricing gold going from the late 90s up until 2011, you'll note that the gold market was in a massive bull run for nearly 12 years before it topped out at the 1900 level. What's happening right now in gold and the indices is one of the reasons we're holding this seminar, because I believe that massive opportunity is about to come upon us. We've already seen some of the best trading in decades. I remember the days of 2005, 2006 when I was trading a live account and the S&P would move 2 or 3 points in a day, and that was a good day. You know, nowadays we're seeing 20, 30, 40 point moves in the markets, and in the currencies, the same type of thing. But what's even more interesting is the way stocks are performing. Now, one of the things we'll teach you today is the importance of recognizing when a stock is acting stronger or weaker than the index that it trades in. So if you're in the United Kingdom, you might be looking at the FTSE 100 or the FTSE 250, which is the main index here. If you're in America, you could be looking at the Dow Jones, you could be looking at the NASDAQ, you could be looking at the S&P 500, which is what most people look at. Of course, you could be in many other parts of the world. China, you could be in Australia, you could be in Malaysia, you could be anywhere. There's all of those places have markets. India is becoming a big market for us at the moment. A lot of traders from India are getting involved in the markets. So what we're going to talk about today, and we're not going to play that, is a method that the smart money don't want you to know about. Now, you might find this a bit ironic, and again, I'm going to answer the question on this. A question had come in from the chat area. Gavin, if you're running a hedge fund, why on earth are you going to teach us how to make money? Why would you not just keep that information to yourself, you and Danny, and just make a load of money and not talk about this publicly? And the reason is very simple, and I'll answer that for you, John, because you asked the question yesterday. It's because when I took this company over with my business partner, Richard, from Tom Williams, and we brought the IPR, the intellectual property, and we brought the company from him, we had to make a promise, a solemn promise, that whatever we did, we would never hide the method of volume spread analysis and the Wyckoff method, which has actually been around, as you can see here. that says the secret trading strategy from the 1930s that hedge funders don't want you to know about. And it talks in this particular article, which is available, by the way, at a website which has got a lot of publicly available stuff which is available for nothing. There's no charge for it. And the website is www.tradetowin.com. I'll put that in the chat area in case you're not aware of it. And it's the subject of what we're talking about today as well. It's tradetowin.com. And it talks about here, the large operator does not, as a rule, go into a campaign unless he, and I'll add or she, sees in prospect a movement from 10 to 50 points. Livermore once told me he never touched anything unless there was at least 10 points in it, according to his calculations. So writes Richard Wyckoff, the legendary trader who in the 1930s wrote a manifesto that gained him a cult following on Wall Street. This is important now. In his 1931 book, The Richard D. Wyckoff Method of Trading and Investing in Stocks, a course of instruction in stock market science and techniques, out of print, somewhat difficult to find these days, but not impossible. Even in 2013, when this was written, hedge fund managers still swear by. One of the key takeaways from the book is that if you want to succeed, you have to learn to recognize the professionals and understand what they're doing. That's what those who follow Wyckoff do. They watch the large operators. Wyckoff walks us through the process of how a large operator will manipulate a stock up or down, so that next time one sees it unfolding on the screen before his or her own eyes, he or she can react accordingly. Now, what is interesting about that particular comment there is we refer to stocks, because in the days of Wyckoff, that's all they traded, it was stocks. But today, here in 2017, on the 23rd of February, we can trade Forex, we can trade futures, we can trade stocks, we can trade options, we can trade commodity, we can trade so many different things. So one of the things I want to talk about today is what are the best instruments to trade and what's one of the quickest ways to learn to trade. So this is one of the subjects that I talked about in my book, was market manipulation. Okay, and I'm just going to touch on this very quickly because it is relevant to today's seminar. Because a few years ago, 7 or 8 years ago, I remember waking up one morning, having a shower, and I usually get good ideas just as I get out of the shower. And sure enough, I had this, for want of a better word, a thought that wouldn't it be great if we could actually share with the world that the fact that the markets are manipulated and we have a system that can show when these markets are being manipulated. And I actually went to my computer to type in a website, and I'll show you exactly what I did. In fact, if I bring up my, excuse me, if I bring up my internet browser here and I type in market manipulation, which is exactly what I did all those years ago, and I put it in the search engine, okay, and it tells you here, right at the top, market manipulation. On Wikipedia, market manipulation is a deliberate attempt to interfere with the free and fair operation of the market and create artificial false or misleading appearances with respect to the price of or market for a security, commodity or currency. And then underneath it is Investopedia. Now you'd expect those to be top, and they are. And then there's a third site, which now is right at the top of most of these search engines and is one of the reasons we get so many people coming into the Trade Guider database. And the website is simply www.marketmanipulation.com, our most valuable site. And a lot of people who visit that site realize that actually, okay, a few years ago, people don't talk about market manipulation. 6 years ago, no one would even discuss it. But when I click on that button, it takes us through to a website. And you're going to see here on this site, there is some articles and some videos. I'm not going to play those to you now, but most importantly, we put together what we call a starter pack, right? Which is an explanation of how the markets are manipulated and why it's actually a benefit that the markets are rigged to the trader and investor that can recognize it. And what happened over the last 3 years made a dramatic change to our business. So one of the key things I want to talk about here is some of the evidence, because I'm an ex-policeman, so I always like to produce evidence here. And this was on the BBC website in April of 2015. And this is a mainstream media website, and they couldn't any longer ignore the fact that people like Michael Lewis, who wrote a great book, by the way, called Flash Boys, brilliant book, really good book. I highly recommend that, by the way, which shows how they can actually rig price. And it talks in here about in his seminal work on the role of high-frequency traders in global stock markets, Michael Lewis quotes Charlie Munger, Warren Buffett's right-hand man. Mr. Munger said that high-frequency trading was the functional equivalent of letting a lot of rats into a granary. I always remember Tom Williams telling me that when the markets were rigged, it was like letting Dracula get in charge of the blood bank. Very similar sort of statement here from Charlie Munger. And we got lots of other evidence coming at us about market manipulation. And why is it relevant to today's event? This is not a conspiracy theory. I'm not a conspiracy theorist. This is a fact. It's a reality of life. But what I'm going to show you today is when the media and the news report events of a negative nature, it's often an opportunity to buy the market. When the media and the mainstream media report some very positive news and the market jumps, especially on high volume, it's an opportunity to sell. And there's plenty of stories about market manipulation. The flash crash in 2010 was a good example. The Forex scandal, how to rig the market. Forex manipulation, how it worked. Forex. I remember I was on Bloomberg a few years ago, and I was asked one of the biggest stories of the year 2014 it was, and I said, well, it's the fact that finally the mainstream media are acknowledging that all markets, including Forex, can be manipulated. And I'm going to show you today how it's done and why it's not how it's done as such, but how you recognize when a manipulative event is taking place. This is a story that's been squashed from 2012. The price of gold has been manipulated. It is more scandalous than LIBOR, wrote Thomas Pascoe from The Telegraph. Now, I'm not going to go any further into this because I want to get to the charts. And I want to talk about what I wrote in the newsletter on the 9th of February. Now, if you didn't get the newsletter, I'm going to show you where we're going to put it shortly. And it's going to be at this website, www, and you're going to just lose the screen for a second here. And there we will now see the Trade to Win site, which we also own, another good domain name. Simply, our message is very simple here. Trade to win in the markets using our methodology and what we teach and a piece of software that I'm going to show you running live. Now, a couple of questions came in, and I've got a lot of things here that I've shared with our customers and non-customers as well. And we don't even require an email address for this information. The best way to understand how to make it in the markets is to view these two mentorship videos, which are available here and here. They're about 2 hours in total. It involves live trading, it involves real money, and it involves a lot more information than just chart reading. But I was asked a question about what can someone expect when they become a Trade Guided customer and learn VSA. Can they become a full-time trader? Can they make it in the market? And it's easy for me to sit here as the CEO and owner of the business and say, oh yes, of course you can. But I would say that, wouldn't I? And so I'm sure with any customer of ours that you speak to. But I'm going to show you two customers who were interviewed in two magazines, in fact. And again, they're available from that website, or you can go to the fact sheet. And basically, if you go and read these articles, because it's a real great story of how just two individuals won live trading competitions with real money, and Earl, in fact, came second in his championship, using the very method that we're going to show you today. And I'll just, again, if you scroll down on these, you'll see it talks about Earl Ehrenler, and he talks about Tom Williams and Tom's book, Master the Markets, how it helped him. Great piece of advice. I'm willing to trade any market when I see a trading opportunity present itself. We'll talk today about how we can recognize which market is setting up. And then, of course, we've got Tim Raymond here. And Tim Raymond came first twice in the Forex Trading Championship. The last time he won it, I think it was a 44% gain on his account. No small feat, and a very, very good return. And I'll just read this to you and then we're going to go straight to the charts. He says, in 1998, Raymond had the good fortune to connect with Tom Williams, the creator of volume spread analysis. I rang him and he was very reluctant to sell me his software. He said, trading is very difficult, you know. I insisted and agreed that I would pay £5,000 in instalments, Raymond says. These days, if I'm asked by someone who is starting out in trading for advice, the first place I send them is the Trade Guider website. For me, it demystified the markets to a great extent, Raymond says. And that website is in fact now relaunched officially today. And you'll see if you go to the front page, it's changed. Okay, so it's not the same site as you would have seen last week. We've changed it. First of all, each month we're going to be putting up a newsletter, which you can subscribe for here if you're not already a subscriber. So you can just put in your name and your email address, and you will then have an opportunity to get our newsletter. And everyone that subscribes to that will get, and if you haven't already got it, you can just click on this button and you'll get it. The first edition of Tom Williams' compilation of newsletters that he did every week with detailed chart analysis. Someone said what's one of the quickest ways to learn VSA? Well, certainly I found, for me, I read Tom's book, I got the software, and I began to practice. It's a bit like learning to play golf. If you practice enough at something, you get good at it. I've been practicing this for some time. When I started, we didn't really have the internet. We didn't really have the ability to do a lot of things that we can do today. I'm sitting here broadcasting to nearly 1,000 people, and I'm doing it from my front office in my house. Couldn't have done that 15 years ago. The world has changed. Now, one of the things I do want to draw your attention to is this button up here. Okay, now this has just become active in the last 24 hours. A lot of people have questions, so they go and look at the products that we offer and they say, hey, I've got a question. And at the moment, our sales team are completely backlogged with demonstration requests. So sometimes it's difficult to get an answer quickly. But if you click on our trading packages button just here, you're going to see that we've completely changed the way we price our products and how we sell our products. So now we offer different options to get involved with the Trade Guider software and training and live trading room. Some of you don't even know that we have a live trading room, and we have an alert service that Danny runs every single day in a Skype room, where the things I'm going to show you now are put into that Skype room for you to actually look at and then decide if you're going to trade. So let's go and have a look. That's the Trade Guider site. It's very easy to remember. Just www.tradeguider.com is the site. It's a new site. It's got new information. So if you haven't been and visited it yet, go and take a look. Let's go and have a look then at what we said in the newsletter 3 weeks ago about higher prices. Now, first and foremost, we're looking now at the E-mini Dow, the Dow Jones futures contract, and we're looking at a weekly chart. Okay, so yeah, Ken, you mentioned there a good way to learn is to look at the short 10-minute trade videos. Well, actually, we combine those videos into the two that are on the Trade to Win site. That is a little bit longer than 10 minutes. I think in total, they last approximately just under 2 hours in total, but they're broken down into segments and they've got handouts that go with them. And that's a great place to start. And that's what I would recommend for anyone that's thinking of starting. And then once you're ready to become involved and to start trading with the software, then we've got various packages which are on the Trade Guider site. Now, I want to draw your attention to this chart. And when we refer to volume spread analysis, the most important thing that we analyze is 3 components on the chart. The first thing is at the bottom of the screen here, is volume. Okay, now volume is the number of orders or the number of ticks that are going through the exchange, or in Forex, it's just the number of ticks that are going through on the price of the particular currency or Forex pair that you're looking at. And it creates high volume, very high volume, or very low volume. And it's all very important because The rule that Tom Williams taught me right at the beginning, he said, Gavin, all you need to understand about volume is that volume is activity. You might even want to write that down. Volume is activity. And 90% approximately of the volume that is created on the price chart is volume from the professional side of the market, often referred to as the smart money, and hence my book is called Trading in the Shadow of the Smart Money. Now, one of the rules that always confused me when I started to trade was that when buying happens or strength appears, it happens as a market falls. And I'm going to show you actually a PowerPoint slide of a presentation I did a few weeks ago, which demonstrates this very, very nicely. And let me just find the actual slide. So you're just going to lose your screen for a second here. So this was from my course that I did, which again is available at tradetowin.com, but I think it nicely summarizes how news and negativity creates anxiety and creates panic in the market. That's done quite deliberately. I love a picture of that cat. I mean, that sums up someone who's seeing their hard-earned money going down the drain. And there's a great statement underneath here. It says, if you do not read the newspaper, you're uninformed. If you do read the newspaper, you're misinformed. And that was from Mark Twain. I want to show you now how some of the biggest opportunities to buy into the market happened when the news was at its worst. Now, we can always relate to things that we're told in the media, mainly, or that we hear on the internet now with social media. And finally, a president of the United States, being Mr. Donald Trump, President Trump, has used the word fake news. Fake news. Now, fake news has been used by smart money for decades, probably longer than that. In fact, Tom Williams, in his book, Master the Markets, actually talks about when he was in the trading syndicate in Beverly Hills, how he would go into a board meeting, usually an annual general meeting where the public were there and the media were there, and he would deliberately ask a false question to the board in front of the public to make people believe that this company that he had actually bought at lower prices was going to land this big deal. And what would happen the next morning, the papers would print this, the price of the stock would then start to go up, people would start rushing in to buy it thinking they're missing a bargain, and then Tom's syndicate would unload and sell everything, causing the stock to crash the next day, with the people buying at the rumour, or literally buying at the top, losing their money. Now, Tom taught me good news doesn't sell. I mean, let's look at one example here. I remember in the year 2000, as we came into the millennium, we were told about a bug, okay, the millennium bug. And anyone that had a computer business, which I did, was told that this was going to be a disaster. We could have planes dropping out the sky, etc., etc. When I woke up on New Year's Day, nothing happened. Then we were told, of course, that after this event, we're going to have in 2012, the world's going to end. That's even more serious. It's not just going to be computers now. This was because of the Mayan apocalypse. Now, if you studied this, as I have, you'll realise that that was not what the message was at all. But the mainstream media picked up on this, and even a film was made by Hollywood depicting the end of the world. And of course, I woke up on December the 22nd, 3 days after my birthday, and what had happened? Absolutely nothing. Okay, now there are some people that actually sold their houses and given up all their worldly belongings on this belief that the world was going to end. But of course, as we know, nothing happened. And what often we see in the stock market, and why this is relevant to the markets, is when news and media report something like gold is a safe haven, it's usually a trap. And you can make a lot of money doing the very opposite of what your brain is telling you to do. If your gut instinct, your brain and everything, including price action, is telling you to buy, it means you should sell. If everything's telling you to sell and get the hell out, it's probably time to buy. As Warren Buffett once said, you can't buy something that's popular and do well. Ironically, in the stock market, in the markets all around the world, many millions of traders who are the general public are using mathematical formulas, stochastics, moving averages that look at past price in attempt to predict future. So as the market goes up and the volume increases, they get buy signals at the top of the market, and they buy and they lose money. And this goes on and on and on. The market has to have losers, and it does have losers. And we call the losers the herd, the group. You're in this seminar because you are not a member of that group any longer, because what you're going to hear today is the truth. So the news is used greatly by smart money to panic the uninformed herd, and as an opportunity to buy stocks, particularly at lower prices. Again, if you read Danny's book, which I'll talk about in a minute, you're going to find some stories in the book about how the news is used to wrong foot people. Here's a good example. Look at the date. 4th of August, 2011. World stock markets in turmoil. Look at the date. Almost 50 billion wiped off leading British shares, and huge sell-off on Wall Street amid economic fears. Now, if I now told you that if you were a Wyckoff VSA expert, that would be a buy signal, and I'm going to show you why, you'll think I'm mad. But if you now look back in time, from 2011 to 2017, you're going to see that was the start. In fact, it was just beyond the start of one of the biggest bull markets it is the biggest bull market we've seen in history. But do you know something? This bull market has been associated with so much negativity and so much doubt and so much fear. Look at Brexit. Look at the Trump presidency. Look at all the negativity that's been bandied around. And that has been a great opportunity for professional money to buy into the market. So if we look at an actual chart and look at the negative news and then look at the volume associated with the buying, you're going to see in 2009, as Lehman Brothers went bust and the start of the big financial crisis happened, look at the volume as the market fell. Professional money began to buy stocks, and they bought at lower prices. If they were up here, within 3 months they were now low, they were buying something. It's like buying a Ferrari. If you want to buy a Ferrari and it's on sale for $150,000, but you know in 3 months' time there's going to be a lot of Ferraris out on the market and the price is going to come down to $75,000, you're going to wait and buy it at the lower price, or you're going to wait for a discount. This is what we got here. Look at the volume as the market fell, but mostly look at the narrowing of the price action every week. This is a weekly chart of the E-mini S&P. We get narrowing of the spreads on this massive volume bar with two green signals next to each other, which actually did mark the bottom of the market in the S&P. And by the way, this schematic hasn't been updated. We're now trading up at 2,300. So this was all the way back. I mean, if I was to redo this schematic, which I will do for my next seminar, you're going to see that every time bad news appears, the fiscal cliff, the Greek crisis, I can keep going. There's multiple examples here. The US government downgraded by S&P. And then this is a great example on an actual chart I'm going to show you. Okay, this is the story of Ebola, which was, and this is on CNN Money. It was on all the major news stories. It says fear has returned to Wall Street this fall. And this was in fact in October of 2014. And at least some of the heightened nervousness can be pinned on Ebola. Now, let me ask you a question. What the hell has Ebola got to do with the price of Apple stock, Google, Yahoo, RIM? I mean, any of them. What has it got? Absolutely nothing, but it's a great story. And what happens as these stories come out is we see this. Here is the actual event, the Ebola event, and we have a signal called a shakeout on that bar. Now, in the VSA method, we teach you to identify strength and weakness in the market based on the imbalances of supply and demand. That's it. This isn't green, buy, red, sell. I'm afraid it's not as easy as that. But we have made it simpler to identify when to buy and when to sell. I do not believe there is any software in the world that tells you exactly where to buy and exactly where to sell and exactly where to put a stop. And the reason is this. Number one, human beings are trading the market. They're all different. They have different account sizes. They have different loss tolerance levels. They're trading different time frames. So you can't sell one thing to everyone and say, well, look, just do that and it will make you money. That's a lie. If you hear any salesman telling you, look, all you got to do is that, and this guarantees to make you money, they're not telling you the truth. The fact is, trading is difficult. It's not easy, but it can be simplified, as we're going to show you. Because once you've made the decision to take a trade, the key to your success is then managing the trade and understanding when to get out of the trade or when to let it run. And this is what the Trade Guider software does. It shows you when a trend is aligning in multiple time frames. Now here we can see the volume associated with that very bad news, okay, which of course was, again, you can see here, 2014, world stock market slide as bad news mounts up. Now, every single TV station that's related to the stock market will be reporting exactly the same thing because they don't know any different. They'll say, everyone is selling today. Everyone is selling. But that's not true. That is incorrect. Because what they should have been saying to you on the week of the Ebola crisis, if they were reporting correctly, and imagine now this is Gavin Holmes for BBC News, this is what the truth is. Ladies and gentlemen, it's the week of 2014. We've heard now from Africa, our correspondents in Africa, that we now have an Ebola crisis. We've had flu crisis, we've had chicken flu, we've had bird flu, we've had all sorts of crises. This one is Ebola. And everyone on Wall Street apparently is selling their stocks. They're getting out. However, we're very fortunate. We've been told the truth by the traders on the floor of the exchange and those in the know. We call them the smart money. And they've told us that actually, while everybody's panicking, they're busy buying and shaking out the market because they expect higher prices in the future. And lo and behold, we see the signal and the market rallies rapidly for 6 weeks. Now, what is interesting is during this massive rally, the reporters who said this was a crisis never come back and say, well, actually, we got that wrong. Their professional money were buying on these two down bars here. And that actually, if you understood Wyckoff and the VSA method, that would be showing you by simple logic that if all that volume was selling volume, the next week could not close higher than the previous week. It breaks the universal law of supply and demand. In this particular example, demand is overcoming supply, and it happens consistently. Here we see the same at the same price, the same negative news. This was more negative news. Over here, negative news. Then we have Mr. Trump getting in, and the market, we can see, starts to rally. And then 5-6 weeks ago, everyone says, I saw this reported on almost all of the news channels. The market is so vulnerable now, we expect it to fall dramatically. And we have 2 weeks of falling prices, and the media are all over this. Oh, this is going to fall, this is going to collapse. And suddenly, in the Trade Guider software program, we see a test, and then a week later, 2 weeks later, after the initial test, if you've read my book, you'll understand it's my favorite VSA indicator. And that's the one I want to talk to you about today, the test in a rising market. Now, why this signal on any time frame works at least 85% of the time in the direction of a long trade. And I've done a lot of historical tests on this. This particular signal works when the market is rallying and you have what we call strength in the background. Now, why is this background here important to what's happening to the market at the right edge? Because this volume is buying on these down bars. As the market's falling, it's buying coming in on these downward moves. Now, you might say, well, hold on, how do you know that's buying? The software's told me there's green indicators down here telling me that there's buying after the shakeout. They've tested the price here and they're ready for this rally. This rally could go on a lot longer than anyone thinks it will. Most traders are particularly worried about the market being overextended. But a few weeks ago, if you read the newsletter, I said the market is still strong and it still applies. That is a test. Now, what is highly unusual about the market at the moment is what I'm about to show you in gold. I'm going to show you the weekly chart. Now, this is very, very unusual to see what I'm about to show you happening. Now, I did a seminar a few weeks ago where I talked about a trigger number in gold having to be broken and then the market rally back up to that number for me to think of a short trade. So I haven't been short gold now for nearly 2 weeks. In fact, the Trade Guide Smart Center Pro, which I'm going to switch on now, has given the true picture. Even though many people associate me as a bear on gold, which I have been for many, many, many years, and I'll show you the reason why. There is always going to be a time in a bear market where there will be a recovery of sorts. And this is actually what started to happen down here on this bar here. We had a test of the 1120 level. And then, very unusually, gold and the Dow and the Nasdaq and the S&P all began to rally. Now, usually gold and the indices are correlated against each other. So gold becomes a safe haven, apparently, when we see weakness in the stock market. Let me show you an example of that actually using the PowerPoint. So if we talk about buying opportunities, okay, professional money, buy when news is terribly bad. And this example that I'm about to show you is as relevant today as it was when it happened, because you still get today, as Danny will probably talk about, because he's going to talk about his book, stories of negativity where you can buy a stock at a very low price, and if you use an option strategy, which we'll talk about today, you can insure that stock so that even if it continues to fall further, you can still be in the money. Now here we can see the headline, BP oil spill crisis. Some of you will remember this. And I remember this well because my wife at the time, Laura, and who's still my wife, we both went to Boston and we went to see, to do a presentation at MIT, the Massachusetts Institute of Technology. And it was the week that BP said, we cannot cap the well. So I remember this particular story very well. But Tom Williams had rung me the night before my presentation to MIT, is the Boston Traders Group. And he said, Gav, look at the BP chart, professionals are buying. And I was literally watching the news as this call came in. I said, Tom, there must be something wrong with our software. Something must have gone faulty with it, because I'm just looking now at the story that they're saying they can't cap the well, and Colonel Gaddafi, believe it or not, of Libya, could be buying BP. That's what I heard. But then there's our signals. This is the actual week of my presentation. Look at the massive volume as the price collapses. Professional money start to buy the share. Now, you think to yourself, hold on a second. Nobody on the news would be telling you to buy that stock at that low price. But if you were a Wyckofian and a VSA expert, you would have been interested in buying. And in fact, where we bought was over here. Because even I didn't believe this. It's not until 6 months later, when the stock doubled in value, I looked back and went, wow. You know, that proves the point. And I used this example in my book, Trading in the Shadow of the Smart Money. And it's the complete opposite when the media come out and say, well, look, stock market's collapsing. We all need to find a safe haven. Let me ask you all a question. Can anyone remember what was the safe haven for traders and investors in 2011, 2012, when the stock market began to fall, as I just showed you? Can anyone remember what the safe haven was? And Javier, I think that's right, I'm pronouncing that right, Javier, is asking, when you get weak signals and strong signals, How do you interpret them to make a trade is, I think, is what you're asking. And I'm going to show you that. I'm going to show you that exactly, Javier. So stay with me because we're going to show you exactly how you interpret them. Okay, so people are typing in the safe haven was bonds and gold. Well, it was in fact both. But I'm going to focus in on gold because the headline was in fact that gold was a safe haven. This is August, the price bar here, August 2011. The stock market collapses. We see massive volume as the market's marked up, but there's a couple of clues here as to why this was not buying from professionals. Because although the media and some of the top analysts around the world in gold were saying all our banks, everyone's buying gold, if that was all buying volume, a couple of things would have to happen. First of all, the closing price on this monthly bar would close near the top, not near the middle. That's the first observation that any intelligent being can make. It doesn't matter whether you're an expert trader or you've just started. The closing price, which is that little tick there, which is the close of the price bar, which is very important in volume spread analysis, VSA as we'll call it. We're looking at the volume, the spread of the bar, or the range, I like to call it, which is simply the low and the high of the price bar. So here we have a wide range bar, very wide, on massive volume. We call this ultra high volume, as we can see here. It's massive volume. We're closing near the middle of the bar, and there's a big red signal on it. It says possible hidden selling. Right? Now, it does say here, future. If you can see that, it says if the next bar is down, and when we refer to a down bar, we're referring to a price bar that's closed lower than the close of the bar behind it. So we can see there's the close here. It's closed much lower than the close of the bar behind it. And it's got another red signal on it. This is known as a trap. So it says if the next bar down is closing near its lows, this confirms the weakness. Well, it did confirm the weakness. This was on a monthly chart. That was 2011. And what happened to gold? It collapsed. The safe haven was not a safe haven at all. In fact, it's the complete opposite. If you'd have bought stocks or bought into the futures market and sold gold in 2012, 2011, you'd have made a fortune. And here is one of our most important signals that I want to talk about today. It's the second one. I've talked about a test in a rising market. This is called a potential buying climax. Now, the importance about this signal is on the bigger time frames, it has far more impact. So if you see a buying climax in a stock on, say, a weekly chart, all right, or a daily chart or a monthly chart, it's going to have a much bigger impact on the move of that stock. And when I bring in Danny to talk about this, now, the reason we brought Danny in to the seminar is that Danny has come through the experience of being a customer of our company to becoming a full-time trader, and then has joined us as an advisor. So unlike myself, who obviously is a major shareholder in the business, Danny's joined this from a customer perspective. And I would say, if you are wanting to find out the best way to learn how to make it in the markets with the Wyckoff method, connect with Danny Younis. He's a guy that will give up 2 or 3 hours of his time each day to connect with customers. He can't talk to everyone, as I'm sure you can appreciate, but he tries to connect with as many people as he can. And he'll tell you how you can find this signal, this indicator, using what we call the Smart Center Pro. Now, let me switch this on now and show you some of the things that we're able to do to find a test in a rising market or a buying climax. Now, first and foremost, before I bring Danny in, I just want to show you something very briefly on this chart before, when I come back in the next part of the seminar after Danny's spoken, I'm going to talk in a lot more detail about scanning. Because one of the most important things about what we offer It's not just how to read the chart. And, you know, a question came in earlier there. You've got red signals, but you've got green signals as well as the market falls. So do I go short there and then buy again here and then buy here? If you bought there, you'd be losing money. And the answer is you use the trending systems that are also part of the proprietary technology to tell you when to take a trade. Now, the other question that came in on the chat thing yesterday, and it was from Raymond, and I know you're in the room, Raymond. You said, Gavin, in your book, you talk about multiple time frames. In your trading plan, you've actually detailed out the time frames that you use. Are these the only time frames that we should use as traders, or can we use any time frame we choose? I'll give you an example of how one customer who's an owner, who's in this room, of the Smart Center Pro, is using a 1 minute, 2 minute, 3 minute, 4 minute and 5 minute chart. That's it, to make trades extremely successfully. Just using 5 time. He's not looking at weekly, he's not looking at daily, he's not even looking at hourly charts. He's found his own system based on using small time frames. What we give you when you get the software and you get the training is a platform that you can adapt to your trading style. Now, if you don't want to adapt something, you say, well, I don't want to do all the work. I just want to use a system that will give me an entry and an exit. Absolutely fine. Here's how you can do that. So the question came in, how do I know when to take a trade based on a green or a red indicator? Red for short and green for long. So first of all, what I'm going to do is I'm going to bring up the scan manager, okay, which is part of the software. Now you can see at this moment in time, I'm scanning the futures markets, okay, and I'm using the Infinity AT charting platform. You can also use TradeStation, Ninja Trader, you can use MT4 for Forex. I've also got that on the other screen that I can show you later. And I'm able to monitor all of these instruments in the time frames that I've chosen. This is completely customizable to your style of trading. Now, as it happens, I like to use the time frames that you can see at the bottom of your screen here. So I've got the 1 minute chart, which I don't really use to trade, but I like to look at it. A 5, a 15, a 60, a 4 hour, a daily and a weekly chart. That gives me a pretty good perspective of the bigger time frame zeroed down into much smaller time frames. And then what I'm going to look for is what we call trend alignment. Now let's just pick an instrument. Let's pick the E-mini S&P. Okay, now I'm just going to ask you all a question. The time frames are to the left. Each block represents a time frame. Looking at that particular scanner, do you think you'd be looking for long or short trades in this instrument? Would you be looking for long or short trades in this instrument? Right now, what would you be looking for? Okay, well, this is how easy it is to identify a trade. If anyone said short, that's not a short setup here. Will the market fall at some point? Possibly. But what we have here is everything we need to look for long trades over the last few days. And again, you can see here, we've just had a green box. You've now got complete alignment of trend in the 1, the 5, the 15, the 60, the 4 hour, the daily and the weekly chart. Over here, we've got a reversal, which happened nearly 3 months ago. Remember I said, and this is important, what I said, keep this in your mind, that on the big time frame, if you've got a sign of strength and everything is green, you will see red indicators, but you give a lot more attention to what we call signs of strength. Meaning, if everything's green, you look for green indicators to go long. Not difficult. That is so simple. If everything's green, you look for green indicators. Now that's on a 4 hour chart and it happened about 8 hours ago. So let's go to the chart where that indicator appeared. And here we can see 8 hours ago, there is a test, sign of strength 13, and it's in the right place. The trending system in the thermometer, which measures bullish versus bearish volume, is green. The volume thermometer, the medium-term trending system, is green. These little diamonds, or dots as they're often referred to, are green, which means everything is aligning to the long side, as it has been now for about 3 weeks. And guess what? Every time we see signs of strength on the big time frame, the market goes up because it's a strong market. Now, that is not difficult. There's nothing difficult about this. And some people say, well, hold on a second, there's a red signal here. There is a red signal, and it knocks the market sideways. Okay, it knocks the market sideways for 3 or 4, well, in this case, a day. But every time in a bull market you see a test on low volume, the market will respond to that test most often. Now, let's try and find a weak market. Now, I'm monitoring all these different instruments, right? I want to find a trade now, quickly. Now, there's 2 ways of doing it. If you are fortunate enough to be a fund manager or you're a professional trader and you've got our Smart Center Pro product, it's instantaneous. It'll tell you exactly pretty much where the trade is. If you're using our scanner, you can still find trades. It just takes a little bit longer. Let me show you. I have now put up the scanner for every single instrument that I'm currently monitoring. I'm now going to ask you as an audience to tell me, and I'll take a trade if there's one here, if I should go long, short or no trade at the moment because there's no trend alignment. So this is the British pound, it's the 6B. Do you think we should be looking for longs, shorts or no trade here? What do you think? Long, short or no trade? Okay, now, let me say, first of all, we can see that the weekly chart is definitely down. Okay, but for the last 4 weeks, it's been congested, which means it's grey. Congestion means the market's whipsawing, which means it's going up and down and up and down. And it's incredibly difficult to make money when a market is whipsawing in a range. The daily chart is also showing me a mixed message. You've got testing, but you've also got the market falling. But what is happening on the small time frames is we are starting to push higher. Now remember, weakness, when it appears, will appear as the market's moving up. Now what we notice here on the 5-minute chart is we've got a sequence of events that's come in the scanner, which has now sent me an email to my email account warning me of an impending reversal in this instrument. So I wouldn't do anything in this instrument right now, but I would be aware of a potential top forming to be back in alignment with the overall downtrend. So I'll come back to the actual chart in a minute and we'll look at the British pound to see if there's a trade. Right, let's go to natural gas. Long, short, no trade. What do you think? Long, short, no trade. Natural gas. Quite straightforward. I would be no trade here because you've got 2 mixed messages here. It's 2 mixed. Okay, the DAX. I'll just tell you, there's no trade for me on the DAX, right? Because it's going down on the small time frames. It's going up on the big time frames. It's not aligned. No trade. Again here, this is starting to look like a long trade, but it's very, very congested on the 15-minute chart. You've got lots of grey boxes. No trade. Here we can see here starting to roll over to the downside, but still a strong uptrend on the weekly. I'm going to be patient and say I'm going to try and find a better trade. The Australian dollar, ladies and gentlemen, long, short, no trade. Long, short, no trade. Absolutely long. No doubt about it. We're going to be looking now for any signs of strength. And if we look at the Aussie dollar, and let's go and actually look at this chart because you're getting the message now, right? So we've got a long on the Aussie. Okay, nothing there, nothing there. I'm just going to do this quickly. Potentially it's starting to roll on the New Zealand. Again here, E-mini S&P. Long, short, no trade. What do you think here? And Michael, I'm going to take a trade here on these instruments when I get my setup. I'm going to take a trade. All right, you've already had it here about 8 minutes ago. We had the test on the S&P, so we're going to have a look at that. NASDAQ, definitely long, okay? Crude oil, potential long on crude. Dow, definitely starting to look long on the Dow. Aussie's going up in front of us. This is the Aussie that we're seeing here. Okay, I haven't got my principal yet, but it's definitely looking bullish. Canadian, mixed. Mixed. Potential long. Potential long on gold. Potential. Still very mixed on the weekly, however. Potential, no, nothing. Nothing on the yen. Nothing. Nothing. You're starting to get the message. No. So we know that the Aussie, Euro's too mixed. Okay. So we now know that on the Aussie dollar, this is a 1 minute chart, we've had the principles of strength in an uptrend. There's a test that came in about half an hour ago, and it came in at just above or just below 7720, and it's gone up about 8 ticks. That's about normal for the Aussie dollar. So that would be what we'd be looking for in the future. Okay, and the same over here. Tests, and I mentioned how important they are. They're very important when the market's going up. 5 minute chart. We're looking for strength, testing on down bars. We're not going to go long up here because the market's too strong up here. It's rallied away. It's likely to come back down. So we're looking to buy on down bars. Now, of course, the great question you're going to now ask, I'm certain, is, okay, Gavin, do I have to sit and watch this for the next 2 hours to wait for that test to appear? Well, if you've set the scanner up correctly, if you're using our software, you can get an email which will tell you when a test appears in any of these time frames. If you don't want to even bother with having to get an email, you can subscribe to our trade alert service, and Danny posts it in the Skype room. All you need is a Skype account. There's 148 members, I believe, still in there at the moment, and they're all typing in when they see these principles. So you don't even have to do the work anymore. It's done for you. However, one of the things for the fund that I needed was to be able to find these in multiple instruments, in multiple time frames for stocks, futures and Forex. And thanks to our brilliant programmer, Grigory Margolin, who's in this room. Grigory, I will give you a call later, by the way. I haven't spoken for a little while, but it's just that I've been really tied up with stuff, but we will connect. But Grigory's been very busy doing lots and lots of work on some stuff that I'm not going to talk about publicly at the moment, but I'm now going to switch on, before I hand over to Danny, Smart Center. Okay, and I'm going to go answer the questions that have come in. Then I'm going to bring Danny in because it's getting late in Australia. So listen very carefully as I switch on Smart Center, and I'll explain to you what it's doing. Here we go.
Trend alignment to the upside has arrived.
Okay, so this is Smart Center Pro. This is our professional hedge fund software, also available to the retail trader. We've made this available to the retail market as well, and we've made the pricing a lot more attractive for the retail trader because we can tailor it to your specific requirements. Now, this is for futures that I'm showing you, but it works for all the Forex pairs. I'll show that at the end, and I'll show you some trades that are set up there, and it works for stocks. And for stocks, you can use either NinjaTrader, TradeStation, which is what I'm using, or you can use Sierra Charts. And it does the same thing. You can monitor stocks that are acting stronger or weaker than the index to find stocks to go long on or to go short on. Now, let me just show you this in futures because we've actually got here some setups. Now, I'm going to scroll up to the top, and we're going to see, not surprisingly, that the markets that we visually picked out with our own eyes are now flashing black. Now, why are they flashing? Because the software, Smart Center Pro, has identified trend alignment. And in fact, on some of these instruments, trend alignment is actually on every single time frame. Sometimes that doesn't happen. You can set in Smart Center Pro trigger parameters which indicators you want to look for, where you want the alerts to happen, i.e. after 50 bars, after 25 bars. And by the way, I'm not going to have time to show you all of the functionality of this particular software, but I am prepared to give all of you a copy of the instruction manual which explains what all of these things do. Even if you haven't got Smart Center Pro, but you want to see how powerful it is and what it can do, email Danny at Trade Guider. I'll put his email address in now, and Danny will have a copy of this, the latest one, danny@tradeguider.com. And again, if you're thinking of buying this, then Danny can give you a one-to-one demonstration of this, because he uses it in the trade alert room, so he can show you all the different settings, because I'm not going to have time to do it here today.
Trend alignment to the upside has arrived.
Okay, so what we're now going to want this Smart Center to do is to find us a trade. Right, now this is where the question came in earlier. Gavin, if I've got red signals and green signals, which one do I take? Well, it's very simple. Once we see trend to the upside, we're going to want to search for green indicators. So if I left click in the box, don't even click the software now automatically will search for those tests, stopping volume signals, anything that's strength will now be alerted to. Same for the Aussie dollar, same for the Dow, same for crude oil, and the same for the NASDAQ. So what's now happening is the trader can sit back and wait now, because the software is sniffing the trade for you. Now, all of these setups where you get signs of strength appearing will come up, and I don't know if in the next few minutes these are going to start firing off trades. If they do, I will most certainly be ready to go long. And I've got 4 setups that I can look at right now. Crude oil, Dow, Aussie, 5, Aussie, ES, and NASDAQ. Now, if we look at the NASDAQ, if you left click, let's take the NASDAQ as an example. It will bring up the same scanner that we showed you at the beginning. And if we take the 15-minute chart, and let's imagine that we were now doing this seminar 4 hours ago or 5 hours ago and this appeared, we've got no supply on a 15-minute chart in harmony with trend. Let's now go to the NASDAQ chart. Let's go to the 15-minute chart. Let's look at the signal and let's look at what the market's doing. That is exactly how you determine in VSA whether to go long or short. Is there red indicators in here? Yes. And does the market fall? Yes. The software isn't wrong, but it's measuring the imbalance of supply and demand as it's appearing. So what we can see in this up move is that the strength is coming in on the green indicators, stopping volume, no supply, testing. But we're going to pay more attention to the green indicators, because look at the color of the medium-term trending system. Look at the majority color here of the thermometer, which is measuring bullish and bearish volume. And here, what was that? That would have been 3 hours ago. You've got right the way down there a markdown in price after some selling, but it's in an uptrend. It's very low volume. It's telling me there's no selling pressure in the market.
Sign of strength has arrived.
Okay, we've now got one live. Let's go and have a look at it. It's the Dow. Okay, so I'm going to click here and I'm going to highlight and say, right, I've now got an alert on a 1-minute chart. Now, personally, I like to see these on the 5 and the 15. I don't always trade the 1 minute, but for the purpose of this lesson, let's go and have a look at it and see if it's something that's worth trading, because it's fired off an alert. So we come up to the Dow, we go to the 1 minute time frame, and we can see where previously, and that is definitely worth a trade, because although you've got some weakness in the background, it's responding to the strength. Okay, now the trade is at the moment, the Dow's at 2780, and I want to put an order just above that, because if this responds to the test, let's just put 2 lots in at 2784, and then what we'll do is, if the market responds to this test, we've got a level bar. It will push us in, attack this top, and then if I look at the 15-minute chart, I can see right behind me now a very clear principle on the 15-minute chart, which is aligning here with the 1-minute chart. So you've now got two principles. Now, where do you put your stop? I'm going to put my stop just below the bottom of the previous week bar here, which is mean I'm very minimal risk. I'm trading a $5,000 account, not a big account that we trade publicly. And what we want to see here, look how many times these tests. Now, the only problem I've got here is we are making a new top here. So, you know, that would have been better down here in hindsight. Of course, it always would. But we'll see. If they're bullish, they will attack this. Well, they'll go for the round number for certain. They'll go up for the round number. Now, let's go back to Smart Center Pro and see if there's anything else that we need to look at. Now, obviously, if we look, I know that test is there, but I now want to see if any other tests are going to come in. All right. So what I'm going to do here is I'm just going to restore this instrument for scanning. And now all of the instruments are restored, or every single one now is going to start firing off. And I want to show you this live. You should see in the next minute, these all again start to fire off. Trend alert or trend alignment to the upside has arrived. So we know there's not many of these instruments that are gone red. A very few of them, in fact. Most of them are to the upside, as we're going to see. Right.
Trend alignment to the upside has arrived. Trend alignment to the upside has arrived.
Okay. So we can see here, we're filled on the Dow. Let's go and reset everything now to search for trades. Okay. So we've set everything now to search for trades. The NASDAQ is there. We can see that the ES is still up there. The Aussie is up there. The Dow and crude. Nothing here, interestingly enough, nothing here is negative. Most of it is currently bullish. Now, I will come and show you how we do this in stocks as we move in. Now, let me just answer some of the questions very quickly before I bring Danny in, and let's have a look. Right, someone asked me to talk more about the smaller time frames. That's Tony. I'll do that when we come back, and we'll actually show you how that can work. Can you define a test? Well, this is an interesting one. Notice on this 15-minute chart, we have a test, right? And you can see that the market at the moment is responding to this test. Okay, not surprisingly, because we've got an uptrend in place. It's a down bar or a level bar. In this case, it's a level bar. It's on very low volume. In this case, it's less than the previous two bars. And the nice thing about this test is it's in an uptrend with strength or high volume in the background, i.e. buying. And you can see I took the test on the 1-minute chart here at 84, right? Now, we'll see how far that goes. Sometimes these tests can fail, which is why you must always use a stop. Because here we had a test that didn't fail. Well, it's actually, sorry, that's not a test. That's just buying coming in. You can see here, it's a down bar. We close near the middle with the next bar up, all right? And the market rallies and fails to respond to any of the weakness. Again, if we look at the 60-minute chart, you can see on the bigger time frames, when you get stopping volume or you get buying coming in, it has a much bigger move, which is why usually I like to trade the tests on the 15-minute or the 5-minute or the hourly charts, because you get a much bigger move. I am more of a swing trader than I am a position trader. I like to, the scalper. When I'm doing these live seminars where we're seeing the setup, the software's alerting us to it, and boom, and we'll show you some of these in Forex in a minute as well, because we've got quite a few Forex alerts that are coming in. What we can see here is Smart Center Pro told us down here at 27.80, I could have gone in, I could have made actually more money by going in on this low here. But it told us that in the uptrend, as here, the market's testing these levels. Now we've made another top, so we've made a new high on very high volume, which is a slight concern. But this is how markets work. They don't go in one direction. This is why, you know, when we see testing down here, you'll notice the market went up, came straight back down, made a new high, back down, new high, back down, new high, back down, new high. This is how markets work. This is how they have to work. And this is why Smart Center Pro takes the guesswork out. It finds the tests for you. Yeah, Paul, I actually put an order in on this particular instrument just above the bar. Okay, now here, when the test filled, it filled on that bar. It went up to 88, so I had 4 ticks in profit. Now I'm 2 ticks down. Not surprising, on a 1 minute chart, this is what you're going to get a lot of chop. But overall, we want to be looking for tests on the big time frames. Those are where your big moves, any stopping volume, testing or buying happens.
Sign of strength has arrived.
And again, we've got another one that's just come in here. And again, it's back on the Dow on the 1 minute by the looks of it. And again, no surprises here. We've now got a no supply test bar. This is how bull markets work. They test these levels, push it up, test, push it up, and on it goes. On it goes. In a short market where the market's weak, which we don't have really, well, I do have them in Forex to show you, you get the opposite. In a downtrend, you short the market on up bars as it goes up. So as it's falling like this, as the market's coming down, you wait for the up bar to come in on very low volume. We call that no demand. And it's the very opposite of what a test does. A test is testing these prices ready for higher prices. You can see multiple examples on the 1 minute chart. Multiple examples. Not only did you see one live and the market react to the test, you're seeing it again. This is not a PowerPoint, guys. This is not me doing something after the event and going, oh, well, you know, there's a PowerPoint of something we did yesterday. This is how it works. This is how the software operates. This is what it looks for. This is how I trade. This is how Danny trades. This is how Grigory trades. This is how Philip Friston trades. These are guys that have been trading with the Wyckoff method. Okay, they've been doing it for a few years, but as you're about to hear from Danny, he started as a customer and has just become an author in the last few weeks. And his book, which I'll just show you here, is an absolute, well, in my opinion, it's groundbreaking because of what he discusses in the book to do with, if you're a stock trader or even a Forex trader or a futures trader, then what Danny is going to share with you now is incredibly relevant. This is, let me just show you the front page. It's called Supercharge Your Trading and Investment Account, as you can see here, using Wyckoff volume spread analysis. Okay, so let me bring Danny. Danny, do you want to just do a quick sound check if you can?
Hello, Gav.
Right, mate, there we go. So I've covered quite a bit there. Sorry, I overran a little bit, but there was a lot to talk about there. I will come back to gold because someone's asked me about gold. And, you know, we actually just had, funnily enough, I'm just looking at Smart Center Pro on the other computer just to show you here. This was something that came in half an hour ago. This was on my, I've got 3 computers here. And there is another example in gold. This shouldn't happen. You shouldn't see gold and the NASDAQ and the S&P all rallying like this. Very unusual, but that's another example there. And if we look at the scanner here in gold, you're going to see it here. Well, why gold is going up is because you had a reversal, but look at the trend all aligning now in gold. This is weird to see gold doing that and then to see the Dow and the others doing the same thing. That is very, very unusual for this to happen, but doesn't matter. It's happening. It's tradable. Have fun. Danny, welcome to the seminar. Obviously, you can see we've got a lot of people here. We haven't lost anyone, not surprisingly, because there's a lot going on. Just very briefly, Danny, I'm going to hand you the screen. Could you talk a little bit about how you learn VSA? A lot of people keep asking me this question. What's the best way to learn? What's the best way to learn? It's, you know, I've just started to take up golf again. And I realised how rubbish I actually am when I actually went and tried to hit a ball and 3 times completely missed the ball altogether. So the professional was sort of smiling at me. He said, did you used to play this? I said, yeah, about 5 years ago. I said, I used to be, well, still rubbish, but at least I could hit the thing. He said, well, you're going to find, Gavin, he said, it's like with the human body. Once you get your swing correct and you correctly swing the ball, your brain will remember that swing and it will become automatic. It just takes a bit of practice. It's a little bit like trading. You know the principles are there. You believe in the principles. You see the principles. In gold here, I mean, that's an absolute classic example there of where you've got a clear accumulation area at the bottom and then suddenly they mark it up and they test the market as it rallies. And that's one of the things I wanted to get across today, was finding those tests. So Danny, I'm going to hand over to you. Ladies and gentlemen, please give a warm welcome from Australia for Danny Eunice. It must be, what, midnight or 1 o'clock out there? Over to you, Danny.
Thank you, Gav. Yes, it's almost 1 o'clock in the morning here. Yeah, so just to answer the question as to how I got started and how I learned the VSA principles, I'll just basically my background, I was a software programmer back in my early days, and I wanted to start trading, so I started trading through a broker, and my very first trade was a losing trade of about $10,000 with the broker, so which prompted me to learn trading, and not to basically rely on somebody else. So I learned everything about the markets, learnt about different indicators such as MACD, RSI, all those lovely indicators, candlestick patterns, all that sort of stuff. But there was still something missing, and it was I was when I was training breakouts, I always get killed because we see a breakout happening in large volume, thinking it's buying, but and all of a sudden it just turns around and goes the other way. So so that's when I came across VSA and Trade Guider. Yeah, so I purchased the VIP package, and I learned everything. Went through all the videos, back tested all the principles, and just learned. And what some people do when they first get started, let's say someone training forex, is that they look at all the different currency pairs, because there's about 30 or so different currency pairs, and it makes it slightly harder to manage. For someone starting out, I think just focus on a few currency pairs, like the major currency pairs, like the Aussie, the Euro, the British Pound. Just focus on the main ones, and also focus on a few VSA principles and master them before moving on to other principles, because it can be overwhelming. But if you take it step by step, like I did when I first started, then it's a lot easier. Yeah, and I just started trading and learning, and attending webinars that Gavin did with Tom. I would wake up at 3 o'clock in the morning just to attend a online seminar. So that's how badly I wanted to learn it. So yeah, so now I work with Gav, and I love teaching this to all our clients. Yeah, so I just wanted to quickly mention about the Aussie dollar. Now I've got the 8-hour chart here, and what we're seeing is certainly strength. So we've had a test. This is a test on low volume. So it certainly looks like it's going to push higher. All right, and gold's do the same thing. But with gold, we've got massive volume starting to come in on the 1 hour. So something to look at. Something, yeah. I think something fishy is going on. But we'll see. We'll see what happens. But the Aussie dollar certainly, for the time being, is looking strong, and looks like it's going to test those highs that it reached. I think it was about 77.40 or so, or 77.50, somewhere around there. Okay. All right. So I just wanted to cover my book, and I just want to get a gauge as to who trades, stocks. Can you just type in yes, you do, Y for yes, you do trade stocks, or N, you don't? I just want to get a gauge of. All right, so most of you do, some don't. Okay. All right, and how about options? Do you guys trade options as well? There's a lot more no's. Okay, there are a few people that do trade options, but a lot that don't. Okay, all right. So, the reason why I wrote this book was because I've been teaching a trading strategy for the last 6 years or so, known as the covered call strategy. Okay, and the covered call strategy is a low risk strategy. Okay, so basically, a lot of people, when they do buy shares, they tend to just buy shares and hold them. Okay, and just wait for the share price to go up in value. And now, is it guaranteed to go up in value? No, it's not. Okay, but you're taking that chance. Now, people that are buying shares, just buying shares, they usually have a 100% risk. Okay, because they've got no downside protection. Okay, so usually if you buy a stock at $32, then you are risking $32. All right. So a lot of people buy shares and do not protect their downside, and they've got no idea about buying a put option to cover their downside risk. A put option is a policy, a insurance policy on your shares. Because would you drive around in a car without having a insurance policy? No, you won't. Why? Because there's a chance that you may have a smash. Okay, so if you don't have a insurance policy, then you're not covered, and you're up for quite a bit. Okay, so the same thing happens in the markets. There's always accidents happening in the markets. Okay, and you need to protect yourself from that. Okay, so in my book I teach about buying a put option to cover your downside risk. Okay, and only risk 5%, not 100%. Okay, so in my book I also go over a stock, BHP. Okay, and this stock before the GFC was trading at around, well, it's about $45 or so. Okay, and when the GFC hit, and we also had news come in about this stock. All right, and this is the news article. All right, Chinese whispers fuel BHP shares. Okay, shares in BHP Billiton have jumped on fresh speculation. A Chinese investor is eyeing up a 9% stake in the company. So that's bullish news. Okay, that is bullish news. And now, if I bring up the chart, and if I can zoom in here, probably can see. Here we go. All right, we can see that was the high, and it came back, and this is where the actual news came in. Okay, and also we had the GFC as well. Okay, so the stock went up to about 45, or I think it was about 45.30 or something, something along those lines. Okay, and it just collapsed. All right, so people who would have bought the stock, let's say you bought the stock at $45. All right, people who have bought the stock are now in a losing position. Okay, now if you look closely at this stock, since 2008 up until today, it has not even returned back up to its highs. It's trading, I think, at around about $30 or so dollars. That's where it's currently trading. So it's been 9 years, all right? And let's say you bought the stock at 45, you have not even broken even. All right? You're still in a losing trade. And what most people do is they tend to, hold it for the long term and hope that it's going to go up, all right? Or a lot of people just bail out, all right, and go and take a loss, saying it's not going to actually, recover. And BHP reached the low of, $18.12, okay, but it has not returned back up above $45, okay. So how would you like to monetize your share portfolio? All right. So if you had bought this stock, all right, in my book I show you a way how you can actually monetize and bring in an income, all right. You can bring in, a income every week or every month, depending on which options you wish to take up. But I show you how you can monetize a share portfolio so that if a stock does tank like BHP did, you can recover most of your losses. Okay, and the way we do that is by selling call options. Okay, we sell call options over our shares. All right, so we sell a call option, we bring in a income, all right, and that income is paid into our trading account up front, as soon as we sell that call option. Okay, so we can sell these call options on a weekly basis, or we can sell them on a monthly basis or a fortnightly basis, depending on what sort of options that are for that stock, because not every stock you can do weekly. There's only I think around 200 or 300 stocks that you can trade weekly. Not all stocks you can trade weekly, but all the stocks you can trade monthly. Okay, so you can monetize your share portfolio by selling call options, and if you did that with BHP, and let's say you earned on a monthly basis, let's say you earned around $1 every month, and the stock is dropping, How many months has it been since 2008? We've had 9 years times 12. All right, so a lot. You could have earned $1 or so, roughly speaking, on a monthly basis. All right, and that's what my book goes through. All right, how you can actually sell call options and actually monetize your share portfolio. Okay, so what I want to show you now is just a couple of trades, and these are real trades that were taken. All right, and I just want to focus on the top 3. Okay, now, and these were done this month. Okay, so the first trade was CSX.
Danny,
right? I placed the trade on.
Danny, just a quick one, just to let everyone know, I've just closed my long trade on the Dow, and I'll show the reason for that in a minute. But it went up. I got 10. It went up about 12 ticks. But just so people know, I've now closed it because an ultra high volume bar came in. You're doing a great job. Back over to you, just to let everyone know.
All right. Okay. All right. So yeah, so I entered the trade on the 7th of February, and I bought the stock at 47.26. Right, that's where I bought the stock. I sold a call option at $48. So by selling a call option, right, what I'm saying is that I agree to sell my shares at $48 if the share price stays above $48. That's what I'm actually saying. All right, so the buyer of our call option can take our shares from us at $48. So if the share price goes up to say $55, while the holder of the call option, the call option buyer, can buy our shares off us at $48. But for them to have that right, they pay us a premium. All right, and that premium that I was paid was $1.47, right, per share. Okay, so if you bought 100 shares, then that's $147 straight into your trading account. Okay, now that call option was to finish or expire on the third Friday in February, which was the 17th of February. Okay, so I got paid $1.47, and the trade was for 10 days basically. Okay, I bought a put option at $44, also at the same date when it finishes, February 17th, and I paid a premium of 83 cents. Okay, so I was covered at $44. So if the stock went down to $20, I can still sell my shares for $44. Okay, so my upfront premium that I got for this trade was 64 cents per share. Okay, now my break even, okay, my break even for the trade was 46.62. Okay, so I've just shown you here how you can buy your shares at wholesale, right, and not retail like most people do, right? Because by selling call options, you can reduce your break even and reduce your cost, right, and purchase your shares at wholesale. So my overall risk for the trade was 5.54%. That was my overall risk for this trade. Now the share price, right, by the close of the trading day on the 17th of Feb was above $48. Okay, so I was paid the 64 cents. I also made a capital gain, right, and the capital gain is the difference between what I paid for the stock and the strike price of our call option, which is 74 cents. All right, so my total return was $1.38, and a percentage return was 2.92%. So I made 2.92%, okay, on this trade, which lasted for 10 days. All right, so who would like, right, to make 2.92% in 10 days, okay, for just doing, I think, about 5 minutes worth of work? All right, now you're probably thinking, 2.92% is not much, but what if you, annualized it? On a monthly basis, that's around, you're looking at probably 6 to 8%, somewhere around there. Or on a yearly basis, it could be, much larger. Okay, so, 2.992% is a decent income for a very low risk trade. Okay, the following trade that I did was for JD, all right, and similar story. 28.54 was on the same day. 28.54 sold a $29 call option and was to expire on February the 17th. I was paid 34 cents. I bought a put option at $27, and I paid 11 cents for that. So my total income was 23 cents. All right, my risk was 4.59%. All right, the stock closed above $29. All right, so my total gain was 69 cents. That's a 2.42% return. Okay, for also a 10-day trade. And lastly, Caterpillar, all right, was trading at, well, I got in at 93.90, sold a $94.50 call, all right, was paid 85 cents. Now I got in at on the 10th, okay. I bought a put option at 91, paid 20 cents for that, so my total income was 65 cents. And look at my risk for this trade, it was only 2.4%. Okay, now this was a 1 week trade, 7 days, and I made a 1.33% return in our 7 days. Okay, with a potential yearly return of around, you know, nearly 48% if it all goes my way every single trade. All right, but that's, you know, potential. Okay, so I hope you can see how powerful this, you know, strategy is, because, you know, yes, it's small, small returns, but the power of compounding our returns, reinvesting what we make, will absolutely grow your trading account. Okay, so my book covers in detail exactly how the strategy works. Okay, now the information in my book, there are educators out there selling that sort of information from anywhere between $5,000 to $7,000. And I've got it in a book format here, where you can get it for $49.95. Okay, so this is a strategy that I've been teaching for quite some time, and I've been trading this strategy for probably about eight years now. So it's a great strategy if you're looking to invest in a retirement account, because several governments around the world allow you to trade this strategy in your retirement account, because it's a low risk strategy. It's much lower risk than just buying and holding shares. Okay, so everything's covered in there. Now, if you're looking at purchasing the book, you can actually get the ebook format, or you can go to Amazon.com and get the printed format. Okay, Bill, it is the buy right strategy, correct? That's a different term for it as well. So if you're looking at buying the book, you can go to tradeguider.com/supercharge. All right. I've just posted that in the room. Okay. And in my book, I go through also my stock selection criteria. Okay. So I've given you my checklist, what I go through for every single trade before I trade. Right? And every item in my checklist has to be met before I place the trade. Okay, so that's in the book, and I've also got my trading plan as well. Okay, so so that's also covered in the book as well. So it goes through how to sell the call options and create a income on a monthly or weekly basis, how to protect your shares, how the markets work, what's VSA principles that I look for, which I've added in the book, what VSA principles that I look out for the covered call strategy. Okay, so I go in depth as to what principles I look for and how I trade them. What do I look for to take a long trade, or when do I look to possibly get out of a trade? Okay, so that's quite quite important as well, when to bail. So I do go through that in my book. Just A couple of questions. Okay. Yeah. Arlen. Yeah. Your question is it's all covered in my book. Okay. When to close the trade, what to do when the actual options expire, and so forth. You know, everything. You know, if when the stock starts to head south, what do you do? When it starts to push even higher, how you can capture more, profit as well. Okay, so it's all covered in the book. Lost the. There we go. Okay. The recording will be posted. I believe Gavin will be doing that.
We'll send it out in an email, Danny. So it'll be emailed out. There's quite a few questions coming in about the Skype room that you run, Danny. Do you just want to, it'd probably be easier if people are interested in the Skype alert room, which uses Smart Center Pro, would be just to email Danny directly, and he can then set you up. He'll tell you what you need to do. So yeah, Danny, can you just put your email address in there, because a few people. There's another way you can connect, there's another way you can connect with Danny, but he doesn't even know about that yet. But I'll show you in a second.
I think I do, Gav.
Have you seen the new chat area on the site?
Yes. I've been using it today.
Okay, mate. All right, it's pretty good actually. It's one of the few things that actually works. Now, talking of which, if I may just take the screen from you for a second.
Yep.
And if you've got any questions for Danny, because we're running out of time, I wanted to keep we've overrun actually. I just want to show you. Can you all see the screen here? I took a trade earlier there, which I closed, and I'm just about to get back in. This was on the Dow, just show you where I got filled and where I took profit. It was only a small trade initially, okay, but I was not at my computer when this appeared, which is stupid of me because I had to go and get a cup of coffee. But nevertheless, these things happen. Let me show you, to finish off with then, some of the setups that have come in from Smart Center Pro. Now you can see everything flashing here. The one that I showed you that we took was here. Okay, again, the whole lesson today is in a bull market, in a rising market, you want to look for signs of strength, which are on down bars or level bars. Here, we had one which came in about 9 minutes ago. Again, it was picked up beautifully by, you can see here in the software here, the test. You see everything's green, and it's also backed up by strength coming in. So again, you're going with the flow of price. And this happens quite frequently. We're going to see more of these type of moves. Interestingly, gold had one came up as well, look. And I'll just show you that quickly as well. If we go to gold, someone asked about it. So there was the test, same principle. And you can see very clearly the move in gold was pretty substantial. You can see from the test at 12.44, we went up to 12.50. That's nearly a $6 move on the 5-minute chart. And again, I can show multiple examples of these because there's quite a few of them coming in today. And these are the sort of days that, especially after a federal announcement, you'll get these moves. There'll be more coming this afternoon. I think tomorrow will be even busier. We also have one on crude oil, which we can see here. Okay, and we can see down here, you've got your shakeout bar, and then over here, a climactic bar, and right down at the bottom here, stopping volume. And then on the Aussie dollar, which was one that we've been watching, very interesting, Danny. We had, well, right the way up this move, we've had testing. Again, I'll repeat, it's in harmony with trend. Everything's green, green, green. Here we come back down, buying coming in, more buying coming in on the downside. And then over here, massive volume up bar, so they push it higher, but they're testing it. So I've got an order in just above here at 7.36 to see if it'll push up higher. Now, yeah, talking about the smaller time frames. So we got this one customer who's preset Smart Center Pro, okay, by using the settings, and he's basically changed the time frames from the hourly, weekly, daily chart to a 1, 2, 3 minute, 4 minute, 5 minute chart.
Trend alignment to the upside has arrived.
Okay, let me just reset these, see if there's any more trades to be had, as we can see. And what's happening is he's just picking up 5 or 6 ticks in a move. He's not going for anything. He's in and out the trade. A little bit like the trade I just took there on the Dow on the 1 minute chart. Yeah, you can see where there was the trade initially. The market ticked up, went up to 96. I was in at 84, so I had 12 ticks. I moved my stop because I saw this signal come in. It's only a 1 minute chart, but I knew there was weakness there, and I got stopped out just here. But then they came back and retested that level, and look, you can see the reaction to that test, and that was picked up very nicely again in Smart Center Pro. Now I know, again, if you've got questions and you want to get a copy of the instruction manual for Smart Center Pro, which shows all the things we couldn't show you today, how you set it up for the different time frames and stuff like that, Danny will have a copy of it. Danny, have you got a copy of that manual that you can send to people if they email you?
Yes, I do, Gavin.
Okay. If you go to the front page of tradeguider.com, we've got something that we just launched over the next, well, we launched it yesterday, and it's actually working quite effectively now because we've got a group of people around the world that monitor the chat area. If you've got questions, if you come onto the main site, which is tradeguider.com, like here on the site, you're going to see it says here, talk to a VSA expert. Now, you've got an option of clicking on that button, which will bring up a chat window, which goes through to either Danny or to Laura or to Doug or to one of the team. They're all VSA experts. They can all help you. Alternative, if you're on the site for a few minutes, then this is sometimes what I'll just test to see if this works. This is a new one, so we'll have to see if this actually works, but we will see. Okay, so this is what happens. Should happen after about a minute. Right, so literally I'm testing this in front of the audience to see how this works. There you go. So there's a little picture of me comes up and it actually works. And if you click on that chat area here, it will automatically open the window for you. Okay, and so it's gone through to whoever's actually monitoring it. There is one for Danny. In fact, Danny, I'm going to do one for you now. Can you just pick it up as well? Let's just stop chatting there. Let me refresh, and you should see me, Danny. Do you want to just try and see if it works for you? I know we're doing this publicly, but it doesn't, because I see loads of people on the site right now. Obviously, stay with it, because obviously you can imagine we've got quite a lot of... So you should see my name there, Danny. If you just type in, and it should come up with your... Just want to see, make sure it works for you.
Yeah, I'm just going into it now.
Okay, all right, we'll just check and just make sure that works. Okay, see lots of people obviously using the chat area. This is the new feature that we've just launched. If you want to have a demonstration of Smart Center Pro in the market that you trade, again, probably the best thing to do is book it by using the this link. And just say, I'd like a demonstration of Smart Center Pro. Please put in your Skype details or your telephone contact number and availability to contact you, because obviously we're going to get a lot of calls. You can appreciate this. Got some more alerts coming in here. Amazing. This Dow has just taken off again. Interestingly, the 15-minute chart has shown an excellent principle at work on the Dow. Look, that is a test of a breakout of an old top. And that's, again, confirming on the 15-minute what Smart Center Pro is actually showing here. You can see that everything is green. The Aussie's the same. The Aussie's about to break out as well, I think. This is the one that's going to go at any moment, so we'll keep an eye on that. But again, for questions on Smart Center Pro, what you need to do, the new website, very simple to use. If you come and click on products and services, okay, click on our trading packages. If you want to get Danny's books, it's in the book section, so there's just 2 buttons there. If you now click on trading packages, you'll see, right, very, very simple to do this. We've got different options for different price points, okay? So if you're looking to get the software that I just have demonstrated, software is the Pro version that I just showed you there, Smart Center Pro. Either call us or fill out the form at the bottom of this screen, right the way down at the bottom here. There's a little form just here. You have to go right to the bottom of the screen, fill out that form, tell us what you're interested in, and make sure that you submit that. That will come directly through to Laura or Danny, and they'll get in touch with you. Obviously, there's some information there about some of the success stories of customers that use this particular methodology. But most importantly, if you want to know about what's on each course and what it involves, just click here or highlight with your mouse the question mark. Okay, click here and it tells you all the different products now with what they contain. It's a very easy to use website. And we know that because we've had lots of people testing it. So please do give us your feedback if you think there's anything we can do to improve it. Would always be, yeah, it's like drinking from a fire hose, some of this. I appreciate that, which is why if you want to know where to go, just go to the site. And if you've got questions, click on that button or fill out the form. Simple as that. We know that there's a lot of information. We know there's a lot of charts that we've shown you. But most importantly today, you've seen actual Smart Center Pro picking up the trades, showing you what's there and showing you. And it isn't difficult. If you look at the principles involved, here's the Dow. We can see a 15-minute chart. These are the ones you want to be looking for. Signs of strength in an uptrend. Signs of strength in an uptrend. In a downtrend, well, I can't see many in a downtrend at the moment, to be honest with you. They're mostly all in uptrends. Oh, here's a downtrending one, look. So you've now seen here the climactic bar on the upside, and now you're trending lower on that particular instrument. Darren was asking, what about the volume in gold in the last hour? Well, you can see here that there's a lot of breakout traders who will be going long up here. But if this gets tested, it could go higher. But I cannot figure out why gold is pushing up through these areas. And yet the Dow is also pushing up. So is the S&P. That's highly unusual. But there we go. All right, everybody. So, Danny, if they need to contact you, probably the best thing now. Do you want to just try and make sure that works? I'm on the site there. Just make sure Danny, you can bring up your little box, and then hopefully that will work.
Yeah.
Because we know you're going to have questions, and that we understand, and we're here to help you.
Yeah, I see you on the site, Gav.
Yeah, so you should be able to put the little message. You should be able to put the little message in there.
There we go.
Okay. Yeah, so I think, Danny, that there's I'll Skype you afterwards. There's a mechanism where you can actually do this. Let me show you.
To invite people.
Yeah, let me just go back onto the site. Yeah, and then when you see someone, if you press the OK button, this is what should come up.
Yeah.
But again, this is new technology to me, so I'm still testing it as well. Anyway, the easy option is to just click on that button and fill out the form, and that'll come through to us. Please be patient with us. I've already seen 7 or 8 people typing in that they want a demo. We'll get back to you. Alternatively, very easy, just email Danny directly, which is danny@tradeguider.com. Simple, easy to remember, DANNY@tradeguider.com. Do keep in mind it's probably 2 o'clock in the morning out there for him now, so he'll have to probably get back to you tomorrow. Okay, everybody, hope you've enjoyed today's session. Hope you've seen that, again, the whole purpose was to show you the importance of testing as the market's going up. We've shown multiple examples of it today. And again, just to summarize, if we look at Smart Center Pro now, very interesting has just come up on the Japanese yen, which you want to go and watch. The black box, which I haven't even talked about yet, but that is going to move this price chart in the next hour. So it's the yen that I'm going to be watching very, very closely here. Very, very interesting. When that black box appears, it means that the market is going into an area of, yeah, you can see this really clearly. This is the Japanese yen now. And actually, it's going into what we call the arrowhead. Okay, which is where this forms like this. And you see the narrowing of the spreads. This will be a breakout. Not sure which direction yet, but again, I'm going to set Smart Center Pro now just to keep an eye on that. Look, you can see we're in congestion, but if these two turn green in the next 25, 30 minutes, then that will break out to the upside almost for certain. So Japanese yen, very interesting principle there, which is, of course, this black box. And you can see over here, we've got a selling climax followed by a testing. And on the 1 minute chart, a reversal. So, yeah, this is looking quite interesting on the yen as well. Danny, thank you for your time. Again, if you want to get in touch, got any questions, go to the new website, tradeguider.com. Oh, hold on a second. It's all happening now. That always is the case, isn't it? It's on the E-mini S&P, everybody. S&P, 1 minute chart. We've now got a test. We've had multiple testing of this level. So again, very interesting what's going on there as well. Please do contact us. If you've got questions, we're here to help you. We'll do our best to get back to you as quick as we can. And thank you, everyone. God bless. Take care. I wish you a rest of great trading day tomorrow, and we'll see you all next week. If you've got any questions about the live trading room or indeed the Skype room, get in touch with Danny. He'll give you all the details. Thanks, everyone. Bye-bye. Cheers, Danny. Bye, mate.
Thanks, Gav. Bye.